The recent COVID-19 pandemic brought the world down to its knees. Economies slowed down, cases and deaths rose, and the entire world itself was brought under great suffering. Just as our world begins to slowly normalize, a global economic disaster could once again test the entire world. Stick around until the end as we dive into the plethora of factors that could lead up to this economic catastrophe. China's economy is on the verge of collapsing and triggering the world's largest recession. Latest economic statistics from China demonstrates the country's grave fragility. The Chinese Communist Party is desperately attempting to alleviate the dire situation. However, the facts have already been revealed. Experts like Cathie have swiftly detected the impending suffering that the globe will experience. For the very first time in nearly half a century, economists predict that the United States' GDP growth will outpace China's. So what is actually happening in China? Today, we will understand the dreadful crisis in China along with the stunning evidence indicating the country's impending collapse. In 1978, when China started to globalize its economy, the nation saw extraordinary rates of economic growth. China's GDP grew by almost 10% annually on average. This resulted in significant riches for all China, including its people. More than 800 million individuals overcame poverty. Education was becoming a top priority. Much-needed improvements in healthcare were imposed, and the pace of technical advancement quickened. China's unmatched economic growth has enabled it to become a renowned manufacturing superpower among experts. However, there's a catch to China's success. Liabilities were the driving force behind China's unprecedented growth. When the economy was thriving, those who took out loans saw a rapid increase in their personal wealth. This motivated others to follow suit, resulting in an even faster acceleration of economic growth. This increased the number of Chinese citizens who obtained loans. The cycle provided a positive feedback loop which resulted in China's rapid advancement. This has been effective previously. However, China's debt has reached an unsustainable level. During China's long period of rapid expansion, the country's government debt to GDP ratio rose to more than 66%. Additionally, China's total public debt to GDP has increased by more than 300% in line with this trend. As a percentage of GDP, it's nearly 60% greater than the global debt to GDP ratio, and nearly twice the non-financial corporate debt to GDP ratio in the United States. China's current problems demonstrate that such high level of debt is obviously unsustainable. For some time, China has been trying to implement the zero-COVID policy. As a result of China's zero-COVID policy, the government has a clear objective: to eliminate all cases of COVID infection in the country. If this goal is to be achieved at all, it will necessitate the enactment of strict regulations that have severe economic consequences. China's GDP has been steadily lowered by financial institutions and economists around the world as a result of the stringent COVID regulations. Another concern is the possibility of a negative feedback loop as a result of China's crackdown on companies with excessive leverage. The economy is slowed down by people who are unable to pay back their loans. This causes more individuals to default, which further decelerates the economy. China's President Xi Jinping has a simple objective of promoting the well-being of the entire country and has been enacting a wide range of regulations to accomplish this. Among them is the real estate industry. Unusual wealth can be seen in the price of real estate. The rise in real estate values has benefited speculators by unreasonable amounts. Through the implementation of new property taxes, Xi is striving to combat this issue. Additionally, Xi has been employing the 3 red lines policy as a means of reining in the real estate industry. Debt limits for property developers are set by 3 red lines policy. All of these policies have resulted in a rapid decline in the price of housing. The number of brand new houses being sold is also declining. In 23 of China's most populous cities, the number of new homes sold in early May 2022 decreased by 33%. 25% of China's GDP is devoted to the real estate sector. As a result, China's GDP would be reduced by 9% as home sales dropped by 33%. Government officials in China are taking every measure possible to prevent the company from going into even further financial trouble. While interest rates rise in the United States, the Chinese government has lowered interest rates in an effort to rescue its economy. Loans to individuals and businesses in China are currently being offered at a prime rate of 3.7%. It is expected that this number will continue to fall over time. Loan rates for 5-year terms have recently been lowered for the first time since 2019 in the country. As far as the majority of investors are concerned, this crash will have no lasting impact on markets in other countries. China's economic collapse, on the other hand, could lead to a global recession. Interest rates are being raised by the US Federal Reserve, which is helping to boost the value of dollar. China's currency depreciation will result in a significant decline in purchasing power, compounding the country's already deteriorating economy. The Fed's primary focus is on the United States. Europe, however, could enter a recession as well. Some shocking statistics emanating from China have an influence on the entirety of Asia. There is a recession taking place, and their currencies are depreciating, thereby diminishing their purchasing power. Consequently, a vicious cycle exists, and the US is not immune to its downturn. The US has already experienced 1/4 of negative GDP, which most people have dismissed as a fluke. Cathie believes that was a genuine number, and the US government should not disregard it. During the year 2021, China's GDP accounted for more than 18% of the world's total output. As a result, a sharp decline in China's economy would have negative consequences for the rest of the world. This is a frightening situation, made all the more so by the fact that Europe's economic growth is sluggish. This could exacerbate international problems, according to Cathie, who compared the Fed's interest rate hike to reckless play with fire. The bond curve in the United States lately inverted for the first time since 2019, indicating the possibility of an impending recession. Inverted yield curves occur when the 10-year Treasury bond yield is lower than the 2-year Treasury bond yield. When the short-term interest rate is higher than the long-term interest rate, this suggests that the near-term risks are higher than the long-term risks. For bond investors, this means that they are bracing themselves for a significant loss, and it is not uncommon for an inverted yield curve to precede a recession. This results in anxious times for both Europe and China as the US Federal Reserve continues to play with fire. The current state of the global economy is extremely brittle, and a collapse in the US economy would have a devastating effect on the rest of the world. Europe is likely in a recession while China produces weak micro figures. Thus, everything depends on the United States. As a result, we believe that the supply shocks are eroding purchasing power in the United States, which could result in a recession that quickly eliminates supply chain bottlenecks. Much of what we are observing right now is a result of supply chain and supply shocks, which we also think are highly cyclical. Some might think this is another world recession like the one we faced in 2008, but this one is a lot worse. We will discuss why and how it may affect other countries. In 2008, a large number of countries faced financial weakness, marking the last global recession. However, the recession of 2008 was not comparable to the magnitude of the current crisis. Chinese GDP grew at a double rate during the global recession of 2008. A significant drop was not seen in the economies of the rest of the Asian continent, Australia, and the African continent. In contrast to 2008, most Asia, Europe, South Africa, Australia, and the United States are now affected by the current financial crisis, making it a global issue. In this video, we've seen a number of graphs depicting China's economy, but it's possible that these numbers are fabricated. Economic data in China is notorious for exaggerating growth while omitting economic disasters. Forgeries of economic data have been exposed in a number of Chinese cities. Because of suspected fake editions, One Chinese northern industrial city named Batu publicly revised its economic report. An additional Chinese Manhattan city style in 2016 exaggerated its revenue by 33%. It's possible that China is already in a recession, but we haven't noticed because of misinformation like this. Experts believe that if we could see the actual figures in China, property sales would decline even more dramatically, and that this could ultimately result in lower oil prices in the near future. Experts believe that China will undergo a major slowdown in addition to a recession in Europe. They believe that if we were to see the real numbers there, we'd see more downturns, given how much the Chinese government has impacted their real estate sector and are exerting regulatory pressure on the economy as a whole. Therefore, experts believe that demand is declining. Given the kind of shocks the US has experienced, experts believe anything is possible at this point. How then, in the light of this information, can shareholders brace their portfolios to withstand the current economic downturn? To keep your money safe, you can simply keep it in cash, but inflation will chip away at your money. International investment is out of the question because both Asia and Europe are in decline. Investing in the US market is one strategy for portfolio protection in the coming months. In spite of what one might expect from this seemingly contradictory statement, US financial markets remain as one of the strongest globally. But despite the fact that the US dollar is witnessing significant inflation, it is still holding up well. To gauge the dollar's strength against other currencies, traders use the dollar index, and despite extreme inflation, this index has been trending upward for the past year. While gold may be a great hedge against inflation, it's possible that gold prices will fall if inflation slows significantly. To put it in another way, every asset has its drawbacks. To reduce volatility while maintaining positive returns, investing in a wide range of high-quality assets would be the best strategy in this situation. Diversification may include 20% cash, 10% gold, 15% Bitcoin, 25% ETFs, and 30% individual stocks. Even if you don't get the best returns with this portfolio, you'll still have enough money to buy the dip and make money in the long run. The dollar is rising, and there are several factors that have led to this. China has become more anti-capital. Recession and war loom over Europe. Moreover, the United States appears to be a more secure location at this time. For those who don't mind taking on more risk in exchange for greater potential rewards, investing in publicly traded growth stocks could be a wise decision. We're all aware that public growth stocks like ARK Invest have plummeted. There are now a wide range of opportunities to produce exponential returns in the coming years as a result of this. Investment in public growth stocks can be risky, so only do it if you're willing to witness your investment fall in value over the short term. In spite of this, a number of billionaires changed their stance on growth stocks and begin to purchase them. We would love to hear your insights on this imminent global disaster. Comment down in the comment section below if you think China will be able to avoid a recession for the sake of the global economy. Which countries do you think will be most affected? If you like this video, kindly like and subscribe, and we'll catch you next time.